Joining us right now, Hatem Dhiab, managing partner at Gerber Kawasaki Wealth Investment Management, and Josh Strange, president of Good Life Financial Advisors of Nova. Thank you both for being with us. Hatem, everybody's looking at this Disney report. Demand is not waning. There is no softness. So much resiliency. The theme parks, Bob Chapek is saying, look, we're seeing so much demand, we could even raise prices soon. And the subscriber growth and strength in streaming has been great too. What's going on here?
Really, hey, Nicole, how are you? Thank you for having me. Incredible quarter from Disney, it really is. We expected 10 million new subscribers. They bring in 14 million new subscribers when everyone else is losing. The parks are up almost $1 billion in revenue. They're just executing really, really well, and just shows you the power of the brand and how good the properties that they have. And Bob Chapek kind of showed up to this quarter and said, "Hey, I'm running this company really well right now."
Yeah, it's amazing. Does anything change here, or does Disney just become this continued behemoth, Josh? We're going to take a look at how they may have these tiers, ad-supported versus ad-free. But as Hatem was saying, to see the subscriber growth of 14 million while others are losing, doesn't that surprise you, and can it continue?
Yeah, well, thanks again, Nicole, for having me. And it was a magical Disney day. Frankly, Bob Chapek did deliver. I think that the streaming, though, there's a little bit more than just the numbers of that top line beat, because only 100,000 of those 14.4 million subscribers came from the US and Canada. So Disney is really looking at a much lower margin growth strategy on the overseas with the Hotstar, Disney Plus Hotstar service. And so I think it'll be interesting to see how that plays out as they continue to focus on this overseas expansion with streaming.
So wait, just explain that a little bit more, because with the competition, it must be tough with Netflix and all the others, Josh. The U.S. and international, where are we really going to see the strong points, Josh?
So, yeah, that's a great point. And competition is very tough. And consumers in the United States and Canada have a tremendous amount of choice within the in-home entertainment space. And when you really look at the report, only 100,000 of those 14.4 million subscribers this quarter were from the US and Canada. The rest were overseas. So Disney's made a big bet with their Hotstar service, which is focused specifically on Asia. And a lot of that strategy is dependent upon the market in India, which there's some concerns there and some expectations of actually seeing significant subscriber loss. Without getting too far into the weeds, they lost the broadcast rights, the bid for the broadcast rights to the India Premier League cricket. So they're expecting to see some attrition in subscribers, because that was a major part of the Indian market strategy. They're working to counteract that through developing native language content, but there's a lot at play here to see how the streaming plays out. But I think the strong point is just how incredibly resilient the parks experience and product space was, which has historically been their most profitable segment.
Yeah. And Hatem, you agree. We've been all wowed by some of the numbers, but you also noted that if there's a slowdown in 2023, that it could affect the success of what we've seen with parks, and maybe they won't be able to raise prices. At the same time, you're also looking at how they're on the hook to buy the rest of Hulu. That's something that is on your mind. There's the competition space, the ad versus no ads, and raising prices. Can they do it? What are some of these themes here?
So a couple of things. First of all, I think the fact that they raised prices by $3 in the US, the Disney Plus tier or the bundle was underpriced compared to both Netflix and HBO. So they knew that they were trying to gain market share through lower prices. Now they know that they have the clout and the content to be able to really kind of increase their margins. I think what Josh is alluding to is that they have about 50 million subscribers in India, which pay less than $1, but by increasing price in the US, they can make up some of those margins. With parks, I was really, really surprised how even though the parks are not running at full capacity, the people in the parks are spending 30% plus, or actually 40% plus than 2019 spending. So what that means is, one, obviously the inflation is there, but also people are spending more time and more money in their parks. Just really good execution.
Let's go over. Yeah. Sorry, I thought you were done. Go ahead.
The last point is I think is 2024. They have to buy 33% Hulu that they don't own yet from Comcast for $27 billion. So that's, I think, for me, one of the biggest overhangs on the stock in the next couple of years. But everything else has just been fantastic execution.
All right, and let's just talk about the stock price here. It's at 118 today. It certainly has come off those lows of 90 bucks. What's a fair price? Where do you see the stock going quickly, Josh?
Yeah, I'm not going to assign a fair price to Disney. There's a lot of variability here. And frankly, that's not something that we really get into. What I'm really interested in is, what does Disney show us about the overall health of the consumer, not only domestically, but internationally. And I think that this quarter has shown that the consumer is still healthy and is still spending money.
Okay, that's good. And quickly, Hatem, do you have a price target on Disney? Would you buy it now?
We're buyers, but I'll politely also refrain from putting a price, just like Josh did. I think, being able to execute this and being profitable in their streaming business will be very, very big, which I think was going to happen next year. So I think that's very positive.
Wonderful to see you both. Thank you very much. Hatem Dhiab of Gerber, Kawasaki Wealth Investment Management, Josh Strange, Good Life Financial Advisors of Nova.